Now, the role of common and idiosyncratic factors is seen by comparing estimates for the euro area to those in the United States, as you see in the figure. Although the two sets of estimates display some shorter-term wiggles, the dominant shared feature is a substantial, sustained 2 percentage point decline in R-star over the past 30 years. We see the same pattern in our model estimates for Canada. According to these estimates, the low R-star regime endures. This finding runs counter to recent commentary suggesting that R-star has risen due to persistent changes in the balance between the supply and demand for savings, such as higher investment in AI and renewable energy, as well as larger government debt. In fact, some measures of longer-run R-star have, in fact, risen to levels well above those that we saw directly prior to the pandemic. In particular, or for example, market-based measures of five-year forward real rates for the euro area in the United States have risen well above the HLW estimates, as shown in this figure. So up in the upper panel is the euro estimates. The blue lines are the HLW model estimates. The gold lines are taken from forward real rates in the lower panels for the U.S. So two things stand out from this figure, and there's a lot of estimates of R-star. Matter of fact, most estimates of R-star use data either from financial markets or surveys. So, when you look at what's going on in financial markets, it helps you think about some of these estimates of R-star. So two things stand out. First, until recently, the far-forward real rates displayed a broadly similar pattern of decline as we saw in the model estimates of R-star. So there's a lot of, before the pandemic, these things tended to move together and tell the same story. Hence, I think, a pretty broad consensus that natural rates had declined significantly in the decades prior to the pandemic. But the second point I would make is the market-based measures can be quite volatile. Indeed, in the years before the recent rise, they had fallen to very low levels, quite negative, in both the U.S. and the euro area, and well below the corresponding model estimates. In looking at this more closely, there's evidence of significant time-varying risk premia in bond yields, and that interferes with taking the market-based measures at face value and assessing what markets are telling us about perceptions of R-star. For example, if we, based on D'Amico, Kim, and Wei term structure model for the U.S., the estimated rise in the U.S. far-forward expected real yields since the onset of the pandemic is significantly smaller than that implied by the direct real read of real yields from TIPS markets. So where does that leave us regarding R-star? Although the value of R-star is highly uncertain, which was emphasized from 125 years ago, emphasized in my paper with Thomas Laubach in 2003, I would argue that the case for a sizable increase in R-star has yet to meet two important tests. First, owing to the interconnectedness of R-star across countries, plausible factors pushing up R-star on a sustained basis are likely to be global in nature. This highlights a tension between the evidence from Europe that R-star is still low and arguments in the United States that R-star is now closer to levels seen around 20 years ago. Second, any increase in R-star must overcome the forces that have been pushing it down for decades. In this regard, recent data reinforce the continuation of pre-pandemic trends in global demographics and productivity growth, along with some of the other drivers of R-star. One lens to which to see this is our model's estimates of potential GDP, or what we very creatively called Y-star. Potential growth rate of Y-star is a key factor in our model that affects R-star in many theories. So many of the explanations arguing for a higher R-star today would likely show up in higher potential output growth as well. However, the HLW estimates of euro area and US trend potential GDP, or the trend growth in Y-star, today in 2023 are nearly unchanged from their respective 2019 values. And this is consistent with other estimates of potential GDP growth for the euro area in the United States.